All right, today we're jumping right into stewardship in action. We're going to tackle a huge question in finance. Why is it that some shocks to the system are just a blip on the radar, while others, well, they become a full-on tidal wave? And this, right here, is the central puzzle. It's what keeps financial stewards up at night. You can have two shocks hit the system that look almost identical on paper, but one gets absorbed, no big deal, while the other one, it triggers a complete meltdown. So why? What's the real difference maker? Well, the core idea from our source material is this one word, propagation. It's not really about the initial shock itself, how big it was or where it came from. What truly matters is how that stress travels through the system. Does it get amplified or does it get dampened as it moves? You could say the shock is just the opening scene. Propagation is the real story.
Okay, so if we want to understand that story of propagation, we need the right lens to look through. And for that, we're going to use the Financial Ecosystem Stewardship framework. Now, think of this less like a rigid toolkit and more like a disciplined way of thinking about what makes these systems hold together or what causes them to fly apart.
This way of thinking follows a kind of 5-step arc. It starts with the system's design. That's the blueprint, the structure. Then you've got governance, which is all about getting different authorities to work together. Next, diagnostics. That's how we actually see and understand the system's weak spots. Stress testing lets us explore how those weak spots might behave under pressure. And finally, institutionalization is about making sure this way of thinking sticks around for the long haul. It's the whole package that creates a real system of stewardship. So what do we really mean by stewardship? Let's be clear, it is not about control. It's not about having a crystal ball to predict the future. It's a continuous, ongoing responsibility. It's about holding a complex system together, managing all the tough trade-offs, and, this is the crucial part, making sure you have the capacity to respond intelligently when things inevitably change. It's all about exercising judgment when you don't have all the answers. Look, a framework that sounds good on paper is one thing, but does it actually hold up in the chaos of the real world? Well, the source material for this explainer does exactly that, so that's what we're going to do too. We're going to apply this stewardship logic to some real-life moments of financial stress. So first up, let's look at the success stories, the ones that often fly under the radar. We're talking about episodes of contained systemic stress. These are those moments where the system bent, maybe even creaked a little, but it didn't break. Figuring out why these didn't turn into a catastrophe is absolutely key. So why spend so much time on the crises that didn't happen? Because of this number. Over 90% of the most important decisions, the ones that really determine the outcome, are made in those quiet moments before things go crazy, back when the signals are still fuzzy and ambiguous. By the time you're in a full-blown crisis, it's already too late. That's a failure of stewardship. So what did good stewardship actually look like when it worked? Well, the case studies show a really clear pattern. The interpretation of what was happening shifted early on. People stopped seeing isolated problems and started seeing the risk of system-wide propagation. Coordination was quick, getting everyone on the same page for a coherent response. And because the escalation was timely, it protected the space for making thoughtful decisions instead of just reacting. And the result? Propagation was dampened and the system just absorbed the shock. Okay, so that's when things held together. Now let's flip the coin and look at the breaking point. What happens when stewardship gets pushed to its absolute limit and beyond? We're talking about the near misses, where the system almost went over the edge, and the full-blown crises, where it actually did. And there's a really important difference here. In a near miss, stewardship capacity is severely strained. Coordination might be late, but it still manages to work in the end. Propagation speeds up, but it gets contained, even if just barely. In a true crisis, though, that capacity is completely exceeded. Coordination just breaks down, propagation goes wild, and the system's own fragility completely overwhelms any attempt to govern it. You know, one of the most critical dynamics here is something called the shrinking decision window. As you move from a contained stress event toward a crisis, the time you have to think and act deliberately just evaporates. In a contained situation, you've got a wide window, time to talk things through. In a near miss, that window is narrowing fast, and you're forced to make decisions under intense pressure. But in a crisis, that window has collapsed. All you have left is emergency action. When you look across these near misses and crises, the same failure points, the same break points show up again and again.
Interpretation gets delayed because the signals are confusing and nobody wants to be wrong. Escalation is hesitant because people are afraid of overreacting. Coordination fails when different agencies with different mandates start to clash. And then eventually, the stress is just moving too fast. It outruns any ability to make a coherent decision. These are the moments the system breaks.
So, after looking at all this, the successes, the failures, the near misses, we get to the big question. What's the true test of this stewardship framework? How do we actually know if it has any value? Yeah, I mean, in a world this messy and uncertain, where you can't predict every outcome, what does validation even mean? You can't run a perfect scientific experiment here, so how do you know if your approach is actually working? And this is the core insight. The value of this framework isn't about predicting the next crisis. It's not about proving you can stop every bad thing from happening. Its real purpose, its true validation, comes from improving the quality of judgment and the coordination long before the final outcome is locked in. It's about making the process better, not just hoping for a good result. So this is the real test. You have to ask these questions. Does the framework help you see the system's weak spots earlier and more clearly? Does it give you a disciplined way to make sense of confusing signals? Does it create a better process for escalating concerns between different agencies? And maybe most importantly, does it help you hold on to that precious decision-making space when the pressure is on? That's how you measure its value. And really, it all comes down to this final thought. Stewardship isn't some abstract theory you can prove on a whiteboard. It's a hands-on responsibility that you have to exercise out in the real world, under constant uncertainty. And its true value, its only real test, can only ever be found by putting it to use.